everybody, I'm Jamie Trull. I'm a CPA, Profit Strategist, and Financial Literacy Coach. Recently, I have pivoted and have been spending all of my time going through all the stimulus options and bringing them to you. If you are a small business owner or self-employed person, you want to make sure to subscribe to my channel. Go watch some of my other videos. I have videos on the EIDL. I have videos on unemployment. I have videos on all the things. So I'm going to continue to make videos on these topics as things change, because they will continue to change as we can see proof of right now. So let me tell you about the most breaking news right now. So today is June 4th when I am recording this. Last night, the Paycheck Protection Program Flexibility Act passed the Senate. So it's passed the House and the Senate now. It's just waiting for the president's signature at the time of this recording. More than likely, depending on when you are watching this, it is probably already signed. It was relatively unanimous, almost unanimous. So there's no reason to believe that President Trump wouldn't sign. He's already signaled approval of it. So we basically can probably proceed from here that these are going to be the new rules. So I'm going to bring them to you as they stand. So let's talk about what's changed, and then we're going to talk about what hasn't changed, and then we're going to talk about what we're still waiting to know, okay? So first, I want to tell you guys what the process typically is for these guidelines. So as we know, right, the CARES Act was the guideline that was originally passed that created the PPP, the Paycheck Protection Program. So with that, it kind of created the framework for what the PPP would be and had a decent number of rules and things like that in there. But it lacked a lot of the implementation guidance, because generally how that works is Congress comes up with the framework, and then they pass it over for something like this. Specifically, it would go over to Treasury, and they fill in the gaps and kind of figure out how it's actually going to work in practice. So a lot of the things that you're familiar with probably about PPP are actually not necessarily from the CARES Act. They may be just from guidance that has come out from the Treasury. So that's really important, that there's two pieces to this pie, right? So we can expect that to continue, where now we have a new bill, and we can expect that some of the questions we probably have are not going to be answered right off the bat, because we've got to wait now for Treasury to take this new information, go rewrite or issue new interim final rules, issue a new PPP forgiveness application, which just came out a couple of weeks ago, right? I do not envy being the person on that team who is writing a lot of this stuff, but ultimately we're going to have to wait a little bit. And that is frustrating, considering that a lot of people are kind of towards the end of their 8-week period at this point in time. And you probably want to know what the rules are, and you want to understand exactly what this is going to look like. So I'll tell you what we know. So let's talk about what we know and what has changed based on the rule. So what we do know, 8 weeks, we've been talking about the 8-week covered period, the 8-week forgiveness period forever. That is what the CARES Act called for. Basically, you were supposed to spend your PPP funds over an 8-week period in order for them to be eligible for forgiveness. They needed to be spent on payroll, rent, utilities, business mortgage interest, okay? So those are the kind of allowable expenses that you can use it for, but it had to be done within that 8-week period. And there were some rules around how much, right? How much you had to spend on payroll, and then that dictated how much you had to spend for other things. So that's the 75% rule that we've talked about. So the two of the major things, I'll say that have changed. The 8-week period is now 24 weeks, okay? 24 weeks. So what does that mean? Technically, now your covered period will be a full 24 weeks. There are still a lot of questions that remain among how exactly that's going to work in practice. It does not appear that you're going to have to pick a specific 8-week period in that 24 weeks. But again, we're waiting on some specific Treasury guidance, but the Act does not call for that specifically. So importantly, we have a little bit of extra time to spend that money. So that may make it easier for people who were having trouble getting employees back, or having trouble figuring out how to spend all that money if they were closed down during a lot of when they got their PPP and did not hire those employees back right away. This gives a little bit of additional flexibility there. So the other significant thing, one of the other significant things, because there are a lot of significant things that this changed, is that now, instead of that 75% rule where we had to spend 75% on payroll to get the whole thing forgiven, you didn't have to spend 75% to get anything forgiven. You could spend under that, but that amount dictated how much you had to spend for non-payroll. It had to be 75% or more of the forgiven part had to be spent on payroll. Now, 60% of the loan has to be spent on payroll. So that's the way it's written anyway, is that not 60% of the forgiven amount of the loan, but 60% of the loan. So right now we're waiting to see and get clarification on what exactly does that mean. Right now, the way that it reads, though, is that 60% of the loan, if you don't spend 60% on payroll, your loan will not be forgivable even in part. Now, that may not stand. That may be clarified further, again, through regulatory legislation or regulatory guidelines from the Treasury Department. But the way it reads right now, it almost sounds like a cliff. So a lot of people are saying, wait a second, what if I spent 59%? I get nothing forgiven. And that's different than how it works today, where there's a little bit of a sliding scale, a complicated calculation nonetheless, but a sliding scale. So yet to be seen what that means, but it does, in essence, reduce to 60% the amount that we need to target for payroll. You can go over that. You can spend more, right? But you have to spend at least the 60% number right now, the way it's written, to get it forgiven. But remember, now we have a full 24 weeks. Importantly, you can still opt to do the 8 weeks. I know a lot of business owners that are basically at the tail end of their 8 weeks. They've already spent it. You do not have to choose the 24 weeks. You can opt to take it as it was, take those calculations as they were, probably go ahead and apply for forgiveness before too long. Yet to be seen if they're going to come out with a new application at all, or how that works with the 60%, but you can use 8 weeks, okay, if you want to, or you can extend it out to 24. Up to you. Okay, so a couple of other things that have changed. If you guys remember, in the original CARES Act and in the Treasury guidance, it does talk about the fact that even if you don't hire back employees right away, right, and maybe your average number of full-time equivalent employees for that 8 weeks is under what it was previously, right? Maybe you didn't hire everybody back, or you waited a little bit to hire them back, that there was kind of this safe harbor rule around as long as you hired back employees by June 30th and paid them no less than 75% of what they were making base salary or hourly wage before, that you would get safe harbor, meaning you would not be penalized, you wouldn't have an amount reduced from your forgiveness because of those things, okay? And there were some things that were called out in more recent guidance that said if an employee was asked to come back and decline during that 8-week period, you could document that and that wouldn't count against you. There were additional rules like that. But now that date has been moved to December 31st. Importantly, it says at least, you have to rehire by at least December 31st, so it stands to reason that you could use another period, but it'll be curious to see how that actually works out in practice. What happens if you bring employees back and you're back to that level, but then you have to lay them off again for some reason. So still to be seen how this is going to work in practice, but it does say by at least that time frame. So the implication would be that as long as you can show that during some pay period at some point in time, you were back to where you were as of February 15th pay period, right? From a full-time equivalent employee perspective and from a salary and hourly wage-based wage perspective, that you would basically not have to have anything reduced off of your forgiveness, that you would be kind of get the check the box on that. Okay, so a couple of additional things that were added in here were related to the FTE requirements, where again, we had a couple of new exceptions to the FTE requirements that were added in on the May 15th forgiveness application. Those were things like if you tried to rehire an employee during the 8-week covered period and they wouldn't come back, and they voluntarily decided not to come back, or they voluntarily wanted less hours, that would not impact your FTE count as long as you documented it. Additionally, if somebody was fired for cause, that kind of thing would not impact your FTE count. They've added a couple more things in this act, though. So the couple additional things that will not count against you from a full-time equivalent perspective when they're doing that calculation is that if you can document you couldn't hire back previous employees and that you couldn't find similarly qualified employees to fill those positions. So that's included in there. And then the other reason that you could also discount them from the FTE calculation is if you can document an inability to return to the same level of business activity as such business was operating at before February 15th. So if your business is not operating at the same level and you can't bring it back to that, due to, and here's kind of the caveat, right? Due to compliance with health and safety requirements established by various government agencies related to the maintenance or standard of sanitation, social distancing, or any other worker or customer safety requirement related to COVID-19. So what this is saying is basically if you can't get back to full capacity in your business because of safety requirements around COVID-19, right? Not because of necessarily reduction in demand or things like that. That does not seem to be included in here. But if it's because, let's say, you can't have the same capacity as you used to, maybe you're a restaurant or maybe you're a salon owner and you're having to limit capacity because of these things, that you will be able to document that, and that will allow you to not have to hire back the full amount of FTEs, okay? So those are important exemptions. Additionally, let's talk a little bit about the term of the loan. So the term of the loan has now been increased. It was a 2-year loan at 1% interest. Now it's a 5-year loan. Assumption being it will probably be the same interest, but we will have to wait and see. And the question here is, though, it looks like this is only going to be automatic for those who are new, who are getting new PPP loans, not necessarily ones who already have them. Now, all the other things will apply to everyone. But the actual loan term, because you have papered loan documents stating a term, would not be automatic, but you could likely go to your bank and renegotiate those terms. Okay, so if you want to do that, you can do that. You can also, my guess is that what will really happen in practice is that when people go to apply for forgiveness, at that point in time, they will be able to renegotiate the terms if any part of their loan is left unforgiven and turns into a loan. Then you may be able to extend it to that 5-year time period. I would imagine that is when the bank will do it because technically payments are not due, right, before a decision is made on forgiveness anyway. So they'll have to repaper your loan anyway because a portion will likely be forgiven, if not the entire thing. But if you still have a loan after it, then that loan would get repapered, and that might be a time to ask to take the 5-year if you wanted to do that instead of the 2-year. Okay. So let's talk a little bit, though, also about when you will be applying for forgiveness. So this clarified a few things that were a little inconsistent previously. So before, it was a little confusing because you needed to apply for forgiveness at some point after your 8-week period, but the banks would have 6 months to review those applications before they had to give you an answer. And hopefully it'll be a lot quicker than that, but that's ultimately what the rule was. Problem with that is that payments start being due on the PPP 6 months from when you receive the loan. So there could be scenarios where you don't have an answer yet on whether you're forgiven, and your loan might be forgiven, but you're having to make payments back. So that didn't make a whole lot of sense. So they fixed that in this law. So instead now what is happening is that payments on any unforgiven portion don't start until after forgiveness is determined. Meaning you'll apply for forgiveness. That'll be after your 8-week or your 24-week period, right? You'll apply for forgiveness. And once that forgiveness is determined, if you still have an amount due, that's when those loan payments would be due. So you will not have to pay on anything until you know whether it's forgiven or not. So that was, I think, a good change that made it a little bit more consistent. Additionally, if you don't apply for forgiveness, let's say you're like, I'm just going to take this thing as a loan, right? If you don't apply for forgiveness, then 10 months from the end of your covered period, right, is when automatically you will be determined to, not be forgiven, and that will turn into a loan. So the other thing that was interesting that they added in here was also something about the deferral of payroll taxes. So if you remember, in the PPP, you can pay the employee side of payroll taxes being Social Security and Medicare. Those are part of gross wages. So you can use PPP to pay for that because you can use it to pay for gross wages for employees. The employer side, which is a 7.65% that employers pay, that is Social Security and Medicare related, could not be forgiven with PPP. So they basically said, okay, you can defer those taxes over to December 31st, 2021 is when you would pay the first installment, and December 31st, 2022. So you could defer basically its payroll taxes paid between March 27th, I think, 2020, and December 31st, 2020. You can defer all of those payroll taxes to 2021 and 2022 if you wanted to, okay? Now think about that before you do it, because remember, now instead of having small amounts to pay with each payroll period, you're going to have giant lump sum amounts due twice over 2 years. So make sure if you decide that you have a plan to kind of save for that and it doesn't become a surprise when you get there and those amounts are due, because that could definitely add up. Payroll taxes over the majority of a year could definitely add up. Okay, so that's really what has changed from the old CARES Act and from previous Treasury guidance. There are a couple of things that haven't changed, so let's talk about that. So the things that haven't changed: no change to the amount of PPP. Still being calculated the same way. For those who have already received it, they were hoping, hey, maybe I'll be able to get more since it's now over 24 weeks. Nope, you get the same amount, you just get to use it over a longer period of time, okay? There's not really any change in what you can use the funds for. Still payroll, business rent, utilities, and mortgage interest. That's pretty much what you can use it for. Now, there's more information, obviously, on what counts as utilities and what counts as mortgage interest. That can be lease payments on different property or fixed assets that you have. So there are, some details there, but it hasn't changed. It's basically the same thing. The rules are essentially the same around what you can spend it on. Now you just have a longer period to do it. No changes on the EIDL advance or loan rules. As of right now, it looks like that EIDL advance is still going to be subtracted. If you received it, it's still going to be subtracted from your PPP forgiveness. So make sure to plan for that. Also, while the forgiven amount is not considered taxable income, all of the things you spend PPP money on are not tax deductions to you, the business owner. Okay, so that was kind of their way of like, okay, it's not taxable, but we're not going to let you take these deductions as well. Does not look like that has changed or will change at this point. You still can't get a second PPP, but if maybe you got PPP and then you kind of freaked out because of the rules and it didn't really make sense for your business and you gave it back, right? You should, as long as you don't have an active E-Tran number anymore, you should be able to reapply. So go and check and see if now the terms are more favorable. You can go and check and see and reapply. Now it's June 4th. This is, again, it has passed. Congress has not been signed by the president, but I can foresee a pretty big rush on these funds. So you probably want to do it pretty fast if you think that PPP might be right for you under these new terms. Okay, let's talk about what hasn't changed yet, meaning some things that potentially could change, but are, as of right now, we need to kind of operate that they haven't. So as of right now, every single business owner is still going to need to fill out an application for forgiveness. They will have to come out with a new one because right now the old one that we spent tons of time going over and doing videos about is no longer really applicable. So they're going to have to redo that scenario. So it's really unclear as to whether they're going to make any kind of changes, though, to make this process easier. So I've been waiting maybe for a sole proprietor, self-employed application to come out that will make the application process much easier. Nothing as of yet. But some of the big banks have kind of joined together to advocate and ask Congress to essentially make it such that all loans with that were under $150,000, all PPP loans under that amount, could potentially just kind of be blanket forgiven and not have to go through the paperwork or as much of the paperwork, okay? So that has not passed. That hasn't even been proposed into Senate. That is just something that the banks are advocating for right now. I do see that it would make a heck of a lot of sense for them to make some kind of reasonable rules around this, because firstly, the application as it stands is complicated enough, right? Now you add rule changes, and it's really burdensome for small businesses. And it's really burdensome on the banks, honestly. About 85% of loans were $150,000 and less. So think about the amount of time that would save the big banks, and then they could just focus in on the larger loans and making sure that all the forgiveness requirements were met for those. Now, that does not mean that even if that does pass, again, that hasn't even been proposed yet, just something being talked about and advocated for, if that does pass, it does not give you a free pass to go spend the money on whatever you want or do it over whatever period. More than likely, I would assume there's going to be some kind of self-certification that would be involved, that you are basically certifying, I used the money correctly, I should be forgiven for this, and you can kind of bypass the whole process to get there. But again, not passed, just something that is being talked about. I will let you know. Again, subscribe to this channel so that you know if something like that happens, because I will be here telling you about it if it does. The other thing that still stands is limits on payments to self. So that was one of the things that was made clear with the new application, that as of right now, it still stands. We'll see if they make any changes. But as of right now, it was basically your owner pay was limited to 2018, 8 weeks of your 2018 pay. So that kind of differs how you would calculate that depending on what type of business you are, whether you're an S Corp, sole proprietor, etc. But essentially, they said, nope, you can't pay yourself over that 8 weeks, more than 8 weeks of pay. What does that mean now that it's 24 weeks? We don't know. Additionally, we don't know what it means for those of you who are on unemployment, or we're hoping to kind of do unemployment, maybe PPP, then maybe go back on unemployment. Lots of questions around how that works. We just have to wait for further clarification on the rules now. So now we wait again. And let's remind ourselves, hopefully it will not take this long, but let's remember the fact that the CARES Act was passed on March 27th. And it was a full almost 2 months since then that we actually got to a place where we had relatively good guidance. It had been kind of released in tranches over that period of time, but there were still things that were open that we didn't have guidance on 2 months later. So it makes me wonder that now what will happen, will the same thing happen where we're going to have a large lag time between the actual act passing and when we get the rules. And that's hard because businesses are trying to make decisions right now. So remember, you always have the option to stick with kind of the 8-week period and do that. But otherwise, you will probably have a little bit of additional flexibility to spend this money and still be able to get forgiven. And maybe, just maybe, they'll throw us a bone and say, you know what, all you smaller guys, check the box, you're good, it's not due. But we do not know as of yet. So again, hope you guys enjoyed this video. I will be here bringing more and more information on this topic as it happens. And please make sure to like the video and subscribe if you liked it. Come on over also to my group, Financial Literacy for Women Business Owners. It is a Facebook group. I will link to it up on the screen here. And that is where I'm answering all your questions about all of these things. So if you have more questions and you want to ask me directly, that's the best place to do it. Come join the group. I'll see you there. Bye, guys.